While everyone is chasing AI, computing power, and hyping NVIDIA, a hidden char, act worth around 50 billion USD, is quietly forming, and almost nobody is talking about it, with the explosion point already set for 2027. So what happened? Thanks to these high-performance AI servers after 2.5 years of NSC operation, their residual value is far beyond what most people imagine. This is what we call the AI server retirement and recycling track, or THEO. Alchemy track, where retired high-end GPUs, liquid-cooled servers, storing and computing modules are transformed into valuable assets. This track, is expected to see a massive wave of retirements from 2027 to 2028, with an annual market potential of roughly 7.6 billion USD. And when considering residual values of components, the total hidden market could reach up to 50 billion USD, making it an enormous investment opportunity, but with high on-chip barriers. Why barriers? Why barriers? There are what we call the three mountains: technological barriers, capital barriers, and regulatory barriers, which make it difficult for smaller players to enter, and a major regulation taking effect in March 2026 will completely reshape the operational rules for server retirement, including standards, recycling processes, environmental compliance, and licensing, meaning the track will accelerate once the policy framework is clear. Location is also crucial, a concept we call computing power geography, because the place of server retirement, transport routes, and the layout of refurbishment or dismantling facilities directly affect profitability. RC's case studies show that regions with high operational efficiency, convenient transport, and low energy costs see higher values for second-hand GPUs and servers, which is why investors need to study international recycling practices and market logic. For ordinary investors, this track has opportunities but also significant risks: misjudging hardware depreciation, underestimating compliance costs, and overestimating secondary market demand are the three major traps. Understanding the server lifecycle, residual compound, and values, and upcoming regulations enables investors to identify opportunities in the A-share and Hong Kong stock markets. Companies involved in data center operations, AI infrastructure, and hardware reuse will capture enormous incremental markets as the retirement wave hits. Tech giants like Alibaba, with strategies such as East Data, West Computing, demonstrate how infrastructure and regional planning influence the computing power value chain. As new AI models demand more GPUs, memory, and high-performance servers, the market value of retired hardware will continue to rise, while environmental and circular economy policies will further support industry growth. Therefore, what seems like an overlooked track is actually a high-value opportunity within AI infrastructure and mastering computing power geography. Policy shifts, technical barriers, And risk traps is the key for investors to realize potential returns.